Good morning, students. How are you all? Hope you all are good. Okay. Have you studied your lessons? I hope so. Now we are in the third lesson, isn't it? Partnership accounts. In partnership accounts, we have already learned the theory portion, the features, advantages, and the application of that partnership deed. Application of the provisions of Partnership Act if the partnership deed is silence. Okay, that we have studied and we have done one problem also. Now we will do the final accounts of partnership. Okay, what are the final accounts? It is as same as the sole proprietorship organization. We have studied in 11th, isn't it? What are the final accounts? We know in common we have two accounts, isn't it? Trading and profit and loss account and balance sheet. But here one more thing is coming, that is the manufacturing account. If it is the manufacturing concern, what is manufacturing? They are producing in the industry. So if it is a manufacturing concern, manufacturing account it should be prepared. Then trading and profit and loss account. Trading and profit and loss account. Then from the trading and profit and loss account we will calculate the gross profit and net profit, isn't it? Then the next one, here after preparing the trading and profit and loss account, we need to divide that net profit to the partners capital account. So one more account we need to prepare, that is profit and loss appropriation account. Profit and loss appropriation account. Here in this lesson you will learn, okay, how to prepare profit and loss appropriation account. Then after that only we need to prepare the balance sheet. Balance sheet. All these are the four accounts they will prepare. Okay. Here first one, manufacturing account if it is the manufacturing concern. Then trading and profit and loss account as usual in the sole trader concern. Then profit and loss appropriation account, what we should do? We have to take this net profit from this profit and loss account and we will make some adjustments. Interest on capital, interest on drawings, then any other remuneration, then salary, remuneration only salary, then balance sheet, everything will be not balance sheet. Then any interest on capital, interest on drawings, all these adjustments we have to make in this profit and loss appropriation account. The balance in this account only will be carried on to the balance sheet. But everywhere we should show the partners detail, partners names. Under each partners names only we will transfer that amount. Everything in the profit and profit profit sharing ratio. Okay. First we will learn the capital accounts of the partners. That is the main thing we have to learn. There two methods are there. Okay. Methods of maintaining capital accounts in partnership form. Methods of maintaining capital accounts. Okay, two methods are there. One is fixed capital method, another one fluctuating capital method. Okay, fixed capital method and the other one is fluctuating capital method. From the name itself we can understand that capital will be fixed. Okay, here this that capital introduced by the partners will be same. It will not change, it will not fluctuate, it will be fixed. So here in this method we need to prepare two accounts. Okay, two accounts. One is capital account. Capital partners capital accounts. Okay, capital account. The other one is current account. Okay, one is capital account and the other one is current account. Very simple only if you understand. Easily you can do the problem. Okay. Here in the capital account, what we should enter? That you should be clear. Okay. In the capital account, what should be entered? Opening capital. Okay. Opening capital. Then any additional capital introduced. Okay. Additional capital. Then any capital withdrawn permanently. Okay, any capital withdrawn permanently. These three must be entered. Okay, opening capital, any additional capital introduced, then any capital withdrawn permanently from the partnership firm. These three only we need to enter in the capital account. Then all the other adjustments we have to do in the current account. Understand, this capital account we will see. One format we will see. Okay. Capital account we should use both the pages. Okay. Capital accounts. Partners capital accounts. Separately we have to show. Okay. Here if it is two partner, 1, 2 column. Okay. Then that is credit side. Then again debit side. 1, 2. Okay. Then debtor, creditor. Then A, B, if it is two partners name A, B, we have to show separately. Okay. Then particulars. Here particulars A, B, rupees you have to write. Okay, the amount. Now, first opening capital. We know that capital shows always credit balance, isn't it? So, by balance brought down. By balance brought down. You have to write fully. Okay. We should write the amount. Okay. For example, 10,000, 5,000. Okay. You have to write like this. Then any additional capital introduced. If it is additional capital introduced by bank. Okay. Through bank. Then we can write by bank. If it is cash, by cash. Cash account debtor to capital account. Isn't it? Again, capital introduced. 5,000, 3,000. Then mostly they never give the capital withdrawn. Then if it is withdrawn, it will come here. Not drawings, this one permanently. That you should remember. Okay. Permanently any amount is withdrawn. That should be written on the debit side. Drawings. But not the drawings. Here withdrawn permanently. If it is given, you have to write. Okay. Amount we should write. Okay. Then we need to balance it. Here 15,000. Here 8,000. The same thing you have to write. To balance, carry down 15,000, 8,000. Okay. 15,000, 8,000. Then again by balance brought down. 15,000, 8,000. Here, this capital account always show that credit balance. Okay, because we introduce only this that opening capital we write, and what we introduce also we write in the credit side. So usually most of the times we get credit balance only, mostly. But sometime if he withdrawn permanently more amount, then it may have debit balance. Okay. Now we will see the current account. What all the items will be entered in the current account? Current account. Partners current accounts. Partners current account. Same. You have to use both the page. Okay. This for example I am showing. what all the items will be appearing in this account. Okay. Debtor, creditor, particulars, partner A, partner B. The name will be given. You have to write the name. Then particulars A, B. Then rupees we will write here. Okay. Then partner's current account may have either debit balance or credit balance. Okay, if it is debit balance, you have to write to balance brought down. If it is credit balance, by balance brought down. Okay, you have to write. If it is for A, 5,000. For B, credit balance 2,000. Okay, we have to write. Then all the other adjustments we have to bring into this current account. Okay, any interest on capital, that will be credited to this account. Okay, interest on capital will increase his capital. So interest on capital. Interest on capital 200 for example. Okay, then if it is interest on drawings, interest on drawings for this person, no. Okay, here 150 you have to write. Interest on capital, interest on drawings. Then by share of profit, any share on the net profit, that we write by profit and loss appropriation account. By profit and loss appropriation account we have to write. The profit is, for example, okay, 2,000 and 1,000. Then any salary paid to any partner by salary, or commission by commission for any partner. Here salary 500, 300, commission 400, 200, whatever it is. Okay, if it is profit, we will give credit in this current account. If it is loss, what we should do? To profit and loss appropriation account. Profit and loss appropriation account. We have to write here. Understand? Either profit or loss only we will get. That's why I am not writing the loss here. Okay, now we should balance this account. Okay, balance this account. This side only. Here again, here 2050, here less, isn't it? So we have to write here 2050. Here 2050. Then by balance carry down. Okay, 0, 5, here 5 plus 5, 10, balance 1. So 550. Here this side only more, isn't it? So write this amount. 0, 0, 9 and plus 2, 11, balance 1, 6 plus 2, 8. Okay, write the same amount here, 8,100 to balance carry down, 8,000, isn't it? Then he will get. Then you should write the opening balance next. Date also will be given sometime. Okay, if date is given, we have to write the date also before particulars date. Then by balance brought down. Which one? This one, A, 8,000. Here, this one should be brought here in next year, next day. Okay, to balance brought down. How much? 550. So this current account we can conclude current account may have either debit balance or credit balance, and we should adjust all the other items than the opening capital, then the additional capital introduced, and the capital withdrawn permanently from the business. Other than these three items, all the other adjustments must be made in this partner's current account. Understood, students? Now this is the fixed capital method. Now we will see one problem in the book. I will show to you, and we will go to the next method. Okay. See this illustration. From the following information, prepare capital accounts of partners Shanti and Sumati when their capitals are fixed. If you should see only this word, okay, fixed. If it is fixed, we need to prepare two accounts. What are the two accounts? First one, capital account. The other one, current account. Okay, that you have to fix. Okay, fix this one in your mind. Fixed two accounts. So particulars given. Okay, Shanti, Sumati. Capital, opening capital. Then current account balance, credit are given. So credit side we should write. Additional capital introduced. Then drawings during 2018. So this year's drawings. Okay, it is not permanent drawing. So this one will be adjusted with the current account. Okay. Then interest on drawings, share of profit. This one profit and loss appropriation account we should write. Then interest on capital, salary, commission. Okay. Shall I do this one? In the notebook I will show to you. Students, better you have your book next to you. Okay. Then only you will understand which item I am writing in which account. Okay. First account, partners capital account, that we have to write. Okay. Partners capital account. That apostrophe you should write after the S. Okay, because two partners are there. Partners capital account. Draw the line. First line, creditor, debtor. Then the particulars column. Okay. Then two partners. Okay. Two partners. Then particulars, date. Only half of the thing completed. Now two amount column. Not two amount, two amount only, but the two partners. Then this date. Okay. Now date, particulars, partner's name we should write. Okay, the partner's name Shanti, Sumati. Shanti, Sumati. Then date, particulars, Shanti, Sumati. Okay. Now, in the textbook you have to see in the illustration, capital on 1st January 2018. Shanti 80,000, the 1 lakh, Sumati 80,000. So that one only we should write. Partners capital account always show credit balance. So we have to write. The date is given, isn't it? Capital on 1st January. So as we write, how to write the date, you know, isn't the first the year, then the month, January, then 1. Here we have to write January 1st. Okay, by balance brought down 1,80,000, isn't it? 1,80,000. 1,80,000. Okay. Then next second item given, current account, that we may not take here. Okay, then additional capital introduced. So that we can take either it is by bank or cash you can write. Okay, by bank account. Bracket you can write additional capital or you can leave it. Okay, 10,000, 20,000. Then the third item what we have to enter, any permanent capital withdrawn, that is not given. Okay, the drawings during 2018, that means that particular year how much he has withdrawn. Okay, but that we may not take. Okay, so now we can close this account. Only credit side we have entered. So write, draw one line and double line, 1,10,000. Same way you can write. Okay, 1 lakh. So the same thing you can write here also. 1,10,000, 1 lakh. The same thing you can write here also. 1,10,000, 1 lakh. Now date, end of this month. Okay, not month, year, isn't it? For the year only we are preparing. Opening capital given 1st January 2018. So it is 1 year only, because the period for one period, accounting period means 1 year. So we can write the end of this year 2018 December. December last date. Okay, 31. To balance carry down. Okay, then the next date. What is the next date? Next year. We have to write 2019 January 1 by balance brought down. What is the amount? 1,10,000, 1 lakh. Okay, now that one account over. Now what is the next account? Partners current account. Partners current account. Here only we are going to make all the other adjustments. Okay, particulars column, double line, up you have to write CR, DR, debit, credit. Okay, divide it into 2. You use but both the pages. Okay, then 2 partners there, 1, 2, then for the date also, then 1, 2, date, particulars, Shanti, Sumadi, again date, particulars, Shanti, Sumadi. Then rupees also you must write. Okay, now partners current account balance we should write first. For that you should check very clearly whether it is debtor or creditor. Okay, in this problem second line they have given current account on 1st January 2018 credit balance. So this side we will start. First write the date 2018 January 1 by balance brought down. By balance brought down 5,000, 3,000. Okay, 5,000, 3,000. Then additional capital we have written in the capital account. Then drawings. Drawings should be written on the debit side because it will reduce the capital. Now we will, here no date is given. Okay, so no need to write. Simply you can write 2018, that you can write only. Drawings, 2 drawings. Drawings how much given? 20,000, 13,000. 20,000, 13,000. Then interest on drawings also, their capital will be reduced. So interest on drawings also must be written on the debit side. If anything that increase their capital will be on the credit side. If any item decreases their capital, it will be on the debit side. Interest on drawings 500, 300. Then share of profit, that is profit. Okay, that profit, so we have to write by, I told you, by profit and loss appropriation account. Profit and loss appropriation account. $10,000, $8,000. 10,000, 8,000. Okay, the next item, interest on capital. It will increase the capital. So, we need to write on the credit side. Okay, interest on capital. 6,300, 5,400. 5,400. Then salary, by salary. 9,000 only for Shanti. For Sumati, nothing. You put dash. Okay. Then commission, by commission. Commission for Shanti, no. For Sumati, 1,200. Now we will balance the account. Okay. Which side? Here 13,300. Here more will come. So we will add. Here also 20,500. Here 10, 15, 20, more than 20. So we will the balance on the debit side, isn't it? So we will close and write. First write 0, 0, 4 plus 2, 6. Can you see? 6. Then 3, 11, 16, 1, 17. Then 0, 0, 3. Then 9 plus 6, 15 plus 5, 20. Balance 2, 2 plus 1, 3. Okay. Same amount you have to write here also. So no, 17,600. Here 30,300. Now we should write 2. That we can write the date. Okay, last date. Balance carry down. 2018 December 31. Okay. 2 balance carry down. Add and write. Okay, 0, 0, 5 there. To get to 3, 8 if we add, we will get 13. Balance 1. 1 is there. We need to get 0. So plus 9, 10. Balance 1, 3, 3. Okay, 9,800. Here 0, 0, 3 there. 3 plus 3, 6. Then here 3. 3 plus 4, 7. There 1, 7. 1 already there. So 4,300 this one. Now we should write here by balance. By balance brought down. Here no space. Okay, you have to write here. Okay students, have you understood this one? Fixed capital method. That preparation of capital accounts under fixed capital method. Now we will see that fluctuating capital method. In this second method, fluctuating method, here we have only one account. What it is? Capital accounts. Partners capital account. We will not have current account because in this capital account only we will make all adjustments. Understand? All adjustments are done only in this capital account. Okay. Here in the fixed capital, what we did by T method. Okay, by balance brought down. Then by additional capital, bank. Okay, for additional capital. Then any withdrawings to drawings. Then at interest on drawings. Interest on drawings here. Then any salary. Then commission. All the adjustments must be done only in the capital account. Okay, partners capital only. Then profit and loss appropriation account. Okay. Then if there is loss, to profit and loss appropriation account. Okay, all the adjustments will be done in the same account. Only one account is maintained. So since you have studied in two, you have to write everything in one account. That is the difference. Okay, now we will see here we can see one illustration. Okay, I will show in the book itself. See, from the following information, prepare capital accounts of partners Mannan and Sevagan when their capitals are fluctuating. Particulars Mannan, Sevagan. Capital, opening capital, credit balance, 2 lakh, 1,75,000. Then drawings, both given. Interest on drawings, share of profit, then interest on capital, salary, commission. Okay, for each person, salary and commission. Now you see the partners capital account, how it is done. Partners capital account, creditor, debtor, then particulars. Since date is not given, we can write, okay, otherwise we can leave it. They won't reduce mark for that one. They will see whether that calculation is correct, whether you have done the found out the capital correctly. Okay, balance correctly. So first the capital we have to write, isn't it? Opening capital. Opening capital by balance brought down, 2 lakh, 1,75,000. Then drawings, second one. Drawings will be written on the debit side. 2 drawings, 40,000, 35,000. Then interest on drawings also on the debit side, 1,500. Then share of profit by profit and loss appropriation account. Okay, that is written. Then interest on capital by interest on capital, 12,000, 10,500. Salary for Mannan alone given, so put dash for Sevagan. Then commission for Mannan nothing, Sevagan only 2,500. Okay, then we need to check which side is having more amount. Okay, here only more amount. So total that column, both the column, then write that amount in this side. Then you find out the difference, write to balance, carry down. Then the same balance, credit side you write by balance brought down. Okay, understood students? Now we will see the differences between fixed capital method and fluctuating capital method. Very easy differences only, what we have learnt. Okay, differences between fixed capital method, fluctuating capital method. Okay, fixed capital method, fluctuating capital method. Fixed, fluctuating. Okay, what is the basis? The first one, number of accounts. That is the main difference, isn't it? Here, how many, in fixed method, how many capital accounts we open? 2 accounts are opened, isn't it? 2 accounts. First one is capital accounts. The other one is what? Current account. Here, only one account, isn't it? Only one account. What is that account? Capital accounts. Okay, then what is the second point? Change in capital. change in capital. Here in the fixed capital method, that name itself I told you, the capital will not change. Okay, the amount of capital will be fixed. Amount of capital is fixed, almost fixed. Understand? If unless there is additional capital. Understand? If there is additional capital, we will enter. Then another one more thing we will enter. What it is? The capital withdrawn permanently. Any amount is withdrawn permanently. If anything is withdrawn or if additional capital introduced, only then the capital may change. Otherwise, the amount of capital is almost fixed. Okay. But here, the amount of capital is changing. Okay. The amount of capital changes often. Understood? Here, it will not change unless there is additional capital and when the partner withdraws amount permanently from his capital. Only then he will have some changes. Otherwise, the capital will be fixed. Okay. The third point, closing balance. What type of closing balance we will have? Here, it will always show credit balance, isn't it? Because always we cannot say, because sometimes that if he has withdrawn more amount than what is available, then he may have debit balance, isn't it? Always credit balance in the capital account. Here we have two accounts, Capital account mostly we will have credit balance, but in the current account they will have either credit balance or debit balance. Understood? Here in the capital account they have credit balance, but in the current account they may have both the balance, either credit or debit balance. Okay, here fluctuating method, mostly they will have only credit balance. Sometimes it may have debit balance also, because if a partner withdraws more amount, he may get debit balance. Okay, it may show a debit balance also, sometimes, very rare. Understood? Then the fourth point is the adjustments, where we do the adjustments. Here all the adjustments are done only in the current account. But even in the capital account we do, isn't it? This additional capital, then any amount withdrawn permanently, we will make adjustment. But all the other adjustments are done only in the current account. Here all the adjustments are done in capital accounts. Okay, all the adjustments, you can write what are the adjustments. Okay, adjustments related to interest on drawings, interest on capital, then salary, share in profit, commission, and all these adjustments are made in the current account. And in the capital account, what they do? Only the additional capital introduced and the capital withdrawn permanently. These two will be entered in the capital account. Here all the adjustments are done in the capital account only. I think you might have understood this one. It is one of the question answer. Okay, 3 mark question answer. 3 mark question answer, third one. Okay, you study this one and write and see. Okay, this one. And again, there are 3 problems there in the book. I will show that one. You have to do. Okay, any doubt you can ask me in the phone. Second, third, fourth. Okay, I will show. Capital accounts, prepare capital accounts of partners Reuben and Derry when their capitals are fixed. Okay, fixed, then two accounts we need to prepare. First capital account, then current account. Capital account, what we should enter? This opening balance, then additional capital introduced. Only these two. Okay, then all the other items you have to enter in the current account. Okay, credit balance. So current account starts with the credit side balance. Okay, then everything as usual only. Okay, then third problem. Here also prepare capital accounts. They maintain their capital accounts under fixed capital. Here also two accounts. First one capital. In the capital, additional capital introduced. Then withdrew for personal use. This is the drawings. Okay, usual drawings. That will be adjusted in the current account. Okay, then all the other items as usual only. Then the fourth one is fluctuating. So only one account, capital account, you should enter all these items in that capital accounts only. Okay, these three problems you do, it is very easy only. Okay, students, you do this one and study that difference. That's all you have to do, your homework. Okay, maintain your that homework note as the classwork note, because we do not have classwork and homework separately. You do this in the same notebook. Okay, students, thank you very much.